Since the United States pulled out of the JCPOA, I believe crude is lower than where it was in May 2018. This hasn't turned out to be the big story for crude, at least to the upside that many people thought it would. Why not, Amrita?
No, you're absolutely right. It hasn't, and that's because of another Trump factor, the fact that he is essentially waging a trade war with China. And I think right now it is all about the macro. It's all about fears of a recession and how deep is that going to be. I think people just don't expect a resolution to the trade war. We definitely don't, at least in the near term. And I think that's been the main factor driving prices. Interestingly, though, to your point, the physical market is incredibly tight. Every crude today is backwardated. So the spreads have reacted to the Iran story. So if you are a trader trading those spreads, absolutely, it has been a very, very bullish development, but flat price just hasn't reacted.
Amrita, quite clearly, as you point out, in the macro story, trade is the big issue right now. And looking at the trade situation, the fear is about the demand outlook. I'm more interested in what's happening in demand right here, right now, just speaking to you. And Amrita, I always come back to this question with you. Are you seeing any immediate signs of demand destruction anywhere at the moment that is material for the demand picture currently for crude?
So what we did see was a significant slowdown in European demand growth, particularly over Q2. Germany wasn't doing very well, but even Italy, France, none of those numbers were very good. But you know what? The July numbers have already started to pick up. We've seen some of the data come out today, whether it be Mexico, whether it be Korea. So some of these countries, again, trade-related slowdown, Mexico with the US, Korea with China, they had slowed down, but some of the prelim numbers are starting to turn. We had year-on-year growth across all these countries, including in Europe. So perhaps we have seen some bad demand data because of basically destocking, but maybe the worst is somewhat behind us if we can get some stability. The worry, of course, is that if the US-China trade war gets worse, then of course it's going to have a knock-on impact, because effectively you are going to reduce trade with other nations as well. And it's those peripheral Asian countries that we are watching and we are very worried about, because that's where the demand weakness at least was in Q2.
And yet, Amrita, when I read through some of your recent research, this word stands out, pops out several times: tightness in the market. Where are you seeing the tightness in the crude market right now?
So the tightness is really in the physical market. If you look at, like I was saying, in the backwardation, Dubai is over $1 backwardated. If you look at differentials around the world, they are trading at multi-year, if not at record high levels, particularly for heavy crude. Because again, the stuff that we've lost, Iranian crudes, Venezuelan crudes, the Saudi cuts, we just don't have enough of the heavy crude oil available that the refiners need. So it's a very bizarre situation, you know, like we've just not seen something like this before, where the physical market is incredibly tight and the correlation with flat prices broken down completely. We've drawn over 80 million barrels of crude stocks since July. You wouldn't think that's the case if you just looked at oil prices, would you?
Amrita, just a final question. A terminal subscriber writes in, a Bloomberg viewer, and wants to ask you the following question. Have you seen energy demand in China drop off in any way, shape or form over the last several months through 2019?
It's slowed down, yes, but it hasn't fallen off, no. I mean, gasoline is still growing at a slow pace. Diesel in particular has picked up, especially with infrastructure projects picking up. Definitely 350,000 barrels per day of growth was the low point, but it's picking back up to 500,000. Has it collapsed? Absolutely not.